All right, man, that was fast, right? Suddenly, the NASDAQ composite is in a critical point. Look at this, folks. Your 200-day moving average, the NASDAQ is right there, and it must hold. I mean, gosh, could you imagine us having this conversation just maybe 30 days ago? And here's the problem. So everyone who complained about just a handful of stocks doing well always suggested that as money came out of that, it would rotate into other areas, right? As growth went down, other areas would go up. Not so much. Not so much. You can see that's not really happening. And, of course, now, tonight, investors are turning their gaze to Meta. Meta's going to report. Now, here's the good news. The last couple of times that they've reported, the stock has performed very well. In fact, the last 3 times the stock has been up, even when it missed once. So maybe, just maybe, Meta could come to the rescue. I'd love to see one of these where the stock is up almost 14% that same day, and it holds those gains for a week. I want to bring in now Bell Point Chief Strategist David Nelson. First, let's go back to just the market in general. Sure. But today, the NASDAQ is in focus. It's getting hammered. What's going on?
It's pretty clear. You had a miss from a pretty big company, Alphabet. The headline numbers were great, but the cloud was slow. We actually sold 40% of the position at the open this morning. But could you interpret that as other companies are taking share from that company? Couldn't it be a company-specific issue? To a certain degree. Obviously, Microsoft had a good number. But for me, the reason we sold part of it, typically we wouldn't do that. But I went back and I looked at the history of Alphabet. Every time they've had a miss, you look at it a week later, it's down further.
Right.
You look at it a month later, it's down even further than that. We'll likely re-enter to a full position sometime about 4 weeks from now.
And this is sort of a cautionary tale on high beta stocks, right? That when the market's up, they're up better. When they go down a lot more.
And it takes a lot longer to get out of these positions because of the amount of shares that are there. Institutions will be selling this for the next couple of weeks.
I got you. So whoever's a seller today with a lot of stock, they can't get out of all of it.
They can't get out of it all of it today.
Okay. And so let's talk about then maybe a shift in strategy. Goldman out there saying that it's time to get out of these companies that have invested for growth, like big CapEx budgets, like these tech names. It's time to focus on those companies that give back, reward shareholders. So essentially they're saying this is the economy, that the economy has peaked. We're going down here to a trough. So right now it's a slowdown phase. During the slowdown phase, they say you want to focus on companies with good balance sheets and returning cash to shareholders, dividends, buybacks. But those haven't worked out. Do you think maybe they're onto something? Is this the time now to start taking a look at those?
It's likely true, but on the buyback side, for me, I'm not on board with that. I get that they may perform, but buybacks to me are code that the CEO has run out of ideas on how to grow the company. It's the easiest way to hit a performance-based metric to hit your compensation target.
Right.
It does absolutely nothing for revenue, does nothing even for net income. It only gooses earnings per share because the share count goes down.
Right.
So I get why they do it, but economically nothing changes.
What about dividends? Maybe take
dividends
a look at
are great. I'm happy if they do that.
All right. The Atlanta Fed updated today. We're still at 5.4%.
Isn't that extraordinary? I don't get it because the market doesn't see it that way. People don't feel that way. And there's a big history with the Atlanta Fed. The early projections don't seem to work out as a
This is spooking the market, though, a little bit, because if the economy is, quote unquote, that strong, then that means the Fed will be higher for longer, maybe even have to hike rates again.
The Fed is one step away from causing an accident. We're about probably, 85 basis points in the 10-year above where we were in March when the first bank started to roll over. There's a black swan somewhere in that package there.
Right. I know you're almost always vested. What are you looking at now? I think someone mentioned the PCAR.
It's a name that we were lucky enough to own going into the quarter. Okay. I like industrials right here. It's almost like tech and drag. So many of these companies are using AI to manage their inventory. Picard is just another one like that.
All right. My man,
hey,
great to have you, especially today. Thanks a lot. All right.